morning to all. Today we will discuss about the importance of financial statement analysis, particular for engineers studying in MBA curriculum. First of all, we'll have to understand what they'll have to learn in the financial accounting, particularly for the financial statement analysis. Friends, those engineers studying in MBA curriculum, they will never be the accountants particularly, but their main purpose will be the utilization of financial statements, rather analysis of financial statement, how to analyze what are the importance of financial data for business corporations. So let us start for the beginning, how to understand how the originating of any financial statement. Financial statement originating starting part, you have to start with a transaction. What is transaction? Transaction which have a financial value. Financial value means either you have to purchase some monetary value. Suppose today I have purchased for 10,000. This will be a transaction. Today I have spent some amount of 10,000 to somebody. This is a transaction. I have paid 1,000 for this month for 5,000. This is a transaction. Today I have spent money for marketing for 2,000. This is also a transaction. Today I have purchased material. This is also a transactions. Now questions comes, any types of events can be transactions? No. It should be based by the financial background. Suppose yesterday I have a good these things memory in my mind, I'll do something, I'll plan something, I will be memorize something, but unless until that event is transformed in the monetary terms, it will never be a transactions. Now questions have come, thereby no non-financial items or transactions cannot be considered in the financial world. Now how to generate? So it will start from the specific head of income or expenditure. We know that head of expenditure means salaries, wages, commission, house rent, building, plant, furniture, income receipts, all those things. Friends, in the entire world, whatever the transactions, it can be broadly segregated in two heads. One is personal account, another is impersonal account. Impersonal account again to be segregated in two parts. One is real account, another is nominal account. Again we are repeating that entire world, whatever the transactions will be there in financial terms, it will be coming either of these three accounts only. It will be surprised for you that no head of account will be other than these three heads, that is personal account, real account or nominal account. Now question comes, what is the debit and crediting formula? In personal account, who will receive any benefit, he will be the debit, and credit who will be giving the benefit, he will be, that is the rules for debit and credit. In case of nominal account, you see that losses and expenses are the debit and incomes and gains are credit. Real account, what item comes in your organizations, that is debit. What goes out, that will be the credit. You will not get a transactions either of these three heads. Whatever the transactions in the entire world, it will be grouped under these three heads only. Now, how to get the figures for any account of your organization? Suppose X&M company, you started a business. Throughout the year, you are making the transactions and recording in your books of accounts. How to get the figures? Say how much I have spent for salary, how much I have spent for rent, how much I have done this thing. So whenever the transaction occurs, you are to journalize and you are to post them into the ledger. Ledger is nothing but the heads of account. As we have explained, every transaction has two sides. One side it will be debited, another side will be credited. So after the total transaction, it may be 1000 transactions or 2 lakh transactions. At the end of the financial year, you are to total of all your heads of accounts. That will be the total expenditure for that head. So that we can call the ledger heads. Ledger heads are very term is the account head only. So ledger head is nothing but the account head only. So if you do for further analysis whether my entire transactions are rightly done or not, you have to make a trial. What is the purpose of trial? Means my transaction, say 7,001 item, I have written one side 7,000 and another side 700. So definitely both sides will not tally. Before doing that, you have to make a trial. That is called trial balance. Next question comes. See, when you are in business, you are not in charity. So you will be knowing what is the performance of your business. So when you know the performance of the business, you know that what is my profit or loss. At the end of the day, whatever the financial activities will be there, it will be judged by your efficiency of the organization in terms of your profit or loss. So how you will get the profit or loss? Profit means total income minus total expenditure. That will be your profit. Very simple. That means if your excess of income over expenditure is the profit, in reverse case, excess of expenses over income, that will be the loss. So this is the vital concept of any business organization. This is the two parameters based upon which you know the trend of your organizations, whether you are going rightly or wrong. Now question comes, when you do the profit and loss, you know that the business accounting is for a period of 12 months. So if it is for a period of 12 months, so for that time, some accounts there will may be outstanding, there may be extra payment. In case outstanding, you have to take into account. Say for example, salaries for month of March, that is year ending March, you have paid in coming year April. So at the end of cut-off date is your 31st March. So then you have to take account for that amount of outstanding in your books of accounts. Similarly, you have paid extra, that is prepaid expenses. You have paid some 10,000 extra to your staff. So that will be the prepaid expenses. You have to reduce from your expenditure so that you will be getting the proper amount, that is for accrual basis. Inter-transactions may not be cash. Whether if it is outstanding or prepaid, you have to take into account so that your accurate financial results will be come to a picture. Now question comes, what you will be doing after that? After that we will be doing the balance sheet. So simultaneously profit and loss and balance sheet will be done. So what is balance sheet? Balance sheet is the combinations of assets and liabilities. Now question will come, what are the assets? Assets means your land, building, plant and machinery, furniture, stock, debtors, that we call the prepaid expenses. जो expenditure not developed or not related to the current year, you are deferring to the future period, so that will be also asset, and your cash will be your asset, and your debtors will be your assets, your stock will be assets. This will be the total assets, say 1 lakh. Similarly, these assets, how it is coming? Accounting equation. These assets either is coming from the promoter's capital, if it is individual, that proprietor's capital, and your profit generated in the form of reserve or added your capital, and your liabilities, either it may be from a loan liability or your general business transaction liability, salary, tax liability, etc. So in general, assets equal to your liabilities, no doubt it. Then liabilities composition 2 parts: capital plus reserves plus other liabilities including loans. So then assets minus capital equal to liabilities, or alternative, assets minus liabilities equal to your capital. Now question comes, how to develop analysis in your books of accounts. You will be knowing that what is my net worth. What is the net worth? Net worth of an organization. If you go for your statement analysis of any organization for investment in shares, you want to know the net worth of the organization. Net worth is nothing but the total assets minus liabilities of the organizations. Because outside liabilities you have to take it out. So that is your net worth. Similarly, capital employed. How much capital employed? Capital employed may be of 3 types. One is own capital, loan capital, and internal capital. Own capital, what is the capital you have contributed in your organization? Loan capital, whatever loans you have taken loans from banks and financial institutions. And own capital, internal capital is nothing but whatever profit generated you have transferred to your balance sheet. So that is your internal capital. That is also a constituent of your asset. So this is the basic concept. Now preliminary analysis of your organization's, what we call caption, that is analysis, financial statement analysis. You will be knowing, you will come to know that what is the percentage on your profit on sales, percentage profit on capital employed, percentage of profit on net worth, and you will be knowing for that what will be your asset generation over a period of time, because these are the basic parameters where you will be seeing for that your profits or your incomes are sufficient enough whatever invested, because you have taken a bank loan, say 10%, so your return on investment should be more than that. Otherwise, why you will take all this risk? So these are analysis you have to do for that. What is your assets are proportionally developing or not? At the same time, some situations you have seen that your percentage of profit analysis may not be sufficient enough for your financial organization's stability or development. You will be surprised to know that you have a good profit, but you are not in a position to make the payment of salaries of your organization. What happened? That means your either debtors or stock, those are not moving fast. That means to whom we have sold the material, that in credit, that recovery is not there. How to get the analysis? That is the liquidity ratio you have to understand. Liquidity ratio is nothing but current assets to current liabilities. What are the constituents of current assets? Current assets are stock, debtors, cash, etc. Current liabilities are your outstanding liabilities, creditors, etc. So 2 rupees your assets, current assets, meaning your liability should be 1. That means 2:1 will be the standard ratio. That means your liquidity is enough to make good your liabilities or other this thing. So here you understand that the one side you know that your profit is good, but there is not the end of your analysis end. So you have to multiple angle analysis will be doing. So when your profit analysis at the same time your liquidity positions is good, then only you will be seeing that your organization is running successfully. So this will be all your first stage of your discussions. If this video is beneficial for you, or you understand that some material is there, you can like it and share it to your friends. And I will be doing for some more financial statement analysis for your MDA second term, which will be little bit more elaborative explanation. So today we will be ending this video this end.